Welcome and thank you for joining us for Workday Chats. I'm Karen Torre, your host for today's discussion. If you have any questions, please share them in the comments below. Today, I am super excited to have two powerhouses in the world of finance and accounting. Karen Schreiber, who's a principal in the finance transformation practice at KPMG, and Philippa Lawrence, who's our very own chief accounting officer at Workday. We'll be tackling how finance leaders are approaching data and analytics to uncover deeper insights, identify opportunities, and make decisions more quickly to drive the business forward. So we're going to get started with something a little bit provocative. Tom Davenport, who, as some of you may know, is one of the leading authorities on data and AI, has said that despite taking an early lead in the use of data and analytics, finance organizations today are primarily focused on transactional applications and reporting, and that they've fallen behind on advanced analytics. Karen and Philippa, any thoughts on this perspective?
Great question, Karen. Finance has always been the control tower of the organization. They know the numbers backwards and forwards. They are the experts, and the organization relies on them. And first and foremost is to make sure we have no financial oops. They are making sure we have integrity in the financial statements, which, if you haven't moved to cloud technologies, if you haven't taken advantage of artificial intelligence, then you aren't able to have that capacity to take on more available insights, if you will, to the organization. And so he's right. But what's great about finance and accounting is that they have the opportunity then to leapfrog because they do understand the backbone of the numbers. There's a couple of things that need to be in place, have good quality master data, have good controls around the processes, fixing data at the source. But if they've done all of that, then they'll be able to leapfrog and have greater insights faster, more on demand, which is where the organization is going. I don't know, Philippa, if you're seeing the same thing in your organization and with your clients, but that's my perspective on this.
I am, and I thought about what Tom's quote is, and I actually wondered whether we were ever in front in the first place, because I've been an accountant for 30 years and I've spent all those years with numbers. For sure, I had access to those numbers, but trying to analyze them and create a story was like pulling teeth sometimes. And I agree with what you said. If you don't have a good basis to pull those numbers and you're dragged down by reconciling and trying to figure out where those numbers came from and are we actually talking about the right numbers, I think you don't stand a chance. So I think as you get better data and you get better systems, then it's in the accountants, for accountants and for FP&A, clearly, we're taught a lot about analytics, and just having that data and being able to do it, it's going to be super empowering. Yeah.
Right. So both finance and accounting, as you both have said, have that financial and analytical mindset that's going to be an advantage. We're coming through one of those extraordinary times in recent history. Have either of you seen an increased sense of urgency for CFOs or other finance leaders to advance that use of data and analytics so that we can do a leapfrog, as Karen had mentioned?
So Karen, let me take that one first.
Of course, go ahead.
Because I've been right on the front line, right? And as we've gone through, especially the early part of the pandemic, where really nobody knew what the heck we were doing or what we were going into. It was a complete unknown world. And what we were seeing is that we were like, oh, let's do scenario planning. What happens if this? What happens if that? What happens if that? I know that's what every company did. That wasn't just what I was seeing. And just being able to pivot and drill down on data and have that data instantly was, I don't know, it was what you needed to survive and to live, and for executives and to support them to make decisions. And it was incredibly difficult. And what I've heard from a lot of people, we were never built to pivot that quickly on data. We just weren't. And so people were getting tired, were brute forcing stuff. And, it was a difficult time. But what it did do is it highlighted how far we've fallen and how important it is to invest in the finance functions. And, I think people in finance already actually knew that, but it really, really put a spotlight on it from the executive management side.
Without a doubt, Philippa. One of the things, KPMG just did an enterprise performance management survey. And what's interesting is that finance, like this, what we've just lived through, really reinforced the need to quickly move to the cloud, leverage advanced analytics. And you're spot on. Many organizations were looking at, will I even have enough cash 8 weeks out? Will I even be in existence 8 weeks from now? So the ability to turn on a dime, run different scenarios. The flip side to all of this was also it highlighted there's a lot of reporting we don't need to do anymore because we weren't together. We didn't have the time to create the thousands of supporting documents just in case on the off chance somebody asked a question. So the power behind this is it freed up some capacity. It really highlighted what is no longer a priority, but then also leapfrog the importance of having digital, having advanced analytics, being able to drive insights more close to real time. So you're spot on.
That's super exciting. So there's a sense that there's a prioritization of what's really important. There's a emphasis on scenario modeling, scenario planning, looking towards the future. If you think about some of the new expectations for finance leaders, can you drill in a little bit on that? And what role does data and analysis play, do you think?
Karen, do you want to take it or shall I? I was just like,
how about I take this one? I'll take this one first and you go next. So data and analytics has always been important to finance and to the organization. I think a couple things have happened. What this has highlighted is the ability to tell a story really has come to the forefront. Many organizations, Philippa, you said this, like we're focused on transactions, like we got to get the controls right, we got to get the accounting right, but it's really about what's that story. And the skills of our people haven't quite advanced fast enough as the technology has advanced. So being able to figure out how do you tell the story with the capability and not actually have to produce the hard copy, but could you do it through analytics, through online, through drilling? Number one, very important. Number two, it's also highlighted that we have to have good data. It has to be clean. It has to be consistent. We can't sit here and argue, is it the right number? But what are we going to do about it? How are we going to close the gap? And so, yes, we're starting to see the third capability, which is being able to incorporate external signals, macroeconomic factors into the analysis. It's not just about what do I know, but what is the world telling us and how is it going to influence and impact our results? Philippa, do you agree? Are you seeing other things?
Yeah, so I have a little bit of a different perspective, but similar. So, I've spent my career reconciling numbers, which I've said, and not only reconciling numbers, but it feels like a lot of time has been always like, what do you got? What do you got? And then going forward from there and going, oh, we have a story. Oh, we're a bit late to the game now. Yeah. And so what I'm seeing, and I actually think about it for myself, is, wow, do I have the right skill sets to take that next leap? And now that, you're getting better data, I've no longer got the excuse of reconciling. Now I've actually got to step into that and be what I should have been a long time ago, which is a person that can craft a story, that can look at numbers and can analyze them. Luckily, I'm not that bad at it. And so, but when I look at the rest of my team, I see that struggle. I see where I get analytics and it's just a comparison between two numbers. And I'm like, yeah, but why? And ask yourself why 3 times. That's what I got taught way back at university.
I got taught why 5 times.
Oh, okay. Well, apparently the English were, I'm like shortcutting that. But ask 3 times and you should be able to get to the source of what is happening. And I think that just makes life so much more interesting for accountants. We're stepping up, we're stepping into these exciting shoes of analytics and being partners to the business rather than just being like literally back office, just doing our reconciliations and popping numbers out at some point where people may or may not like them. And we're mostly a statutory kind of thing. Now we're moving towards being more partnering, and we just need those skill sets to be able to do that. And I extrapolate that and think there are people, I think about previous places I've been and people I'm talking to and just how we're going to have to start training folks that are in work already and helping them to that next step. But
well, and it's interesting that you say that, because there's also the lens of to be a finance professional and be successful, do you need to do a tour of duty, if you will, and some of the other functions in your organization? So you really are learning the business. You are becoming that well-rounded professional, because you're right, to tell the story, you actually have to connect the dots to the operations, to procurement, to logistics, to the back office, and bring it all together. And if you've only been in finance and you've never actually been in the other parts of the business, it is a struggle. You're right. You will end up getting sort of that actual compared to budget or actual compared to prior year, and it's just math. It's not the why. Super important.
Yeah, you're absolutely right, and it's just math. And I know when I was at university a long time ago, I studied business, and it was fascinating.
Yeah.
But then I became an accountant, and basically I realized I can close the books of any company and not actually know what they do, and that's kind of shocking. And so when I was younger, I always took that extra step to try and figure out what the company did, what are the economics around this, what's happening in the world, and how does that affect the business I'm working on. But not everyone is as curious as I am, or quite frankly, wants the time to read like The Economist or something. So, and that's really, really valuable now.
Yes.
To being able to reflect on what the business is doing and being curious about what the business partner is doing and saying, hey, why are you doing that? How do you do that? How can you do it quicker? Yeah. I have a list of questions I ask people.
Which I love. And I think you nailed it with you must have intellectual curiosity. Mm-hmm. That is something that we tell our clients, we tell our consultants, because if you don't have intellectual curiosity, you're not going to connect the dots. You can go through the mechanics, you can get to that control, that root cause, but it's math oriented. It's not, but what are we going to do about it? How do I close the gap? How do I think about it a little bit more strategically to really drive and be that business partner with the rest of the organization?
100% agree.
Yeah.
There's so much to unpack in that. So the change in mindset from maybe technical accuracy over to a lens of curiosity. There's the concept of job rotations, maybe, Karen, that you mentioned. Are there other best practices that either of you have seen to encourage that embracing of finance and accounting to be more of an analytics lens as opposed to a transactional expert?
Well, I know I'm supposed to take this, but I'm going to punt this over to you, Karen.
No worries. So I actually think there's a little bit more of a focus now on having the softer skills, being able to communicate, being able to really tell the story. So, in a world of we can text, we can do the shorthand, we can hide behind emails, there's still that skill set that is required, especially when there is a gap in the numbers, especially when we close out the month end or we forecast and it didn't come to fruition. You really have to be able to have relationships with the business. You have to be able to drive to what are some things that we could do. And that's a little bit of a softer skill. It's not as much of a know the numbers. It's about connecting the numbers and what it's telling us, and then being able to process it and say, what can we go do about it? And is what we do about it real? Is it attainable, achievable? And that's a skill set that, as Philippa said, it's that part of the brain we actually haven't had the chance to necessarily really flex in a long time because we've been so focused on keeping the lights on, keeping the controls in place. But it is something that's becoming way more important, especially with digital, especially with the advanced analytics. It's, okay, how quickly can I use that to inform, make a decision? What does it tell me? How do I drive it? So that would be my first response to the question.
Absolutely.
And I agree with that because, I said it, you can't use the numbers as an excuse anymore to get away from talking to people and actually understanding. And I know that, as I've changed companies, one of my first things to do is try and figure out who are those key business people. And then connect with them. And it's always uncomfortable because you're like, oh, what can the accountant do for you? I'm not sure, but I want to understand the business. So that's what I want out of this conversation, but trying to figure out what I can give them, because I like conversations where it's a give and take and it's a good partnership. But interestingly enough, out of every single conversation I've ever had, even though I've gone into it wondering what I could do for that other person, something has come to fruition. And it's just incredible. I swear to you, every conversation, I'm like, oh, I don't know what I can do for this person. But then you talk about the business and you understand what they're doing. Then suddenly you're like, oh, I could do that and I could help you that. I can partner on that. I can have my accountants do something here that's good for you. So I think those partnerships they were always valuable, right? But they are critically valuable now, so that you can use that knowledge to apply to your numbers, to be able to analyze this massive data that's coming at you with a touch of a button. So yeah,
right.
I totally agree.
I think, Philippa, you might be a little too modest. I know you advise within Workday, for example, on our M&A strategy. So are there other examples you'd feel comfortable sharing about how you've applied, you and your team, your accounting expertise, your finance expertise, to advise on business strategy?
Well, since you brought up M&A, there's a prod to me. Yeah, so we've really got M&A down here at the. We're able to. I think the last acquisition we did, we got it integrated in 3 weeks. So that's all the people onto the system and all the vendors on the system, which everyone listening knows those are the critical 2 things to get on your system as quickly as possible, because everything flows from that. And so being able to do that quickly, then to be able to combine those numbers together as one company, and then being able to report out to the different business units is really important, because I've been in companies where you make acquisitions, maybe it's held separate for a while or maybe brought in quickly, but there isn't the visibility to those numbers. And so I sometimes look at it like a child who gets a present on Christmas Day and is really interested in it for like Christmas Day, but then just leaves it. And sometimes I feel like acquisitions are a bit like that. So it's really good to be able to get insight into that data like day one.
Yes.
And really, really measuring like how are they doing, so that you can make it better or pivot or whatever you have to do to support the business. So I got that one there.
Yeah. And that, I mean, Karen would love your perspective, but that seems to me pretty notable to have day one complete visibility into the shared financial implications of an acquisition. How many companies are able to do that today? Probably not very much.
Not very many. I can think of a handful off the top of my head that are able to do it. And in order to be able to do that, I think, Philippa, the couple pieces you didn't touch on is having a good common data model that everybody uses, where you will stop doing this is how it's going to work and how it's going to feed in. You have a common platform, you have standard processes, you have the right controls in place. So all of that enables you to actually tuck in that acquisition in 3 weeks. Now, I have a consumer products organization that I've been working with where they did an acquisition, and call it a year in, the COO came to us and said, I need to know if the company we bought and the products that we bought were actually accretive to the overall value of the organization. So think about it. Now this is where they've spent the money, they've tucked it in, and yet they can't prove out, did they get the value to the shareholders, to the business with that acquisition. And so being able to really have that information sort of and monitor it as you go, because of course, when you do these acquisitions, you've committed to a return on investment over a finite period of time. Wouldn't it be great to be able to tell your shareholders you've achieved that value? In a year, we said it was going to be 3 years, or we're going to achieve that value, but then that much more, because you've got the insights and the analytics, because you've got the common platforms, the common data model, things like that to drive that.
Yeah, and Karen, you're right. I took all of that for I just assumed that was there, right? You can only do like common processes and everything else and realize 3 days. But also, just a bit of a myopic point is that if you can't look at the different streams of the business, you've valued that business, you brought it onto the books in a certain value, and you have to prove that it's maintaining that value. So if you don't have insight to that number, you're going to find yourself in trouble there as well.
For sure. And the analysts are going to ask, did you achieve the value? And that's really where you get handcuffed, because they know you purchased it, you committed to the street, to the shareholders, this is what you're going to deliver. And so they're going to keep asking you, how are you progressing on it? And you don't get to get away from that, because you obviously know that very well.
I'm super curious, Karen, you've talked about the importance of the finance data model. As you're advising your clients, who do you involve in that definition? Is finance and accounting at the same table? Is that primarily driven by IT? Is it a combination of all of the above?
Great question. It's something that everyone struggles with. It's not just finance and accounting. It's operations, it's supply chain, it's procurement, it's marketing, it's sales. I mean, I have one client where they wanted to deliver brand profitability. Okay, that was one view of the P&L that they wanted to look at. They also wanted to look at product category profitability. Well, how sales or marketing determines the product category. So let's be clear, I will eat cereal for breakfast. I mean, cereal for dinner, not breakfast. Well, cereal is traditionally considered a breakfast food. So, but from a marketing perspective, do we start targeting and going after that as a meal, given everyone's been home for the last year? We've seen a pickup in that sort of a product line. Well, does that mean I change how I run my business from monitoring the profitability of those items? No. We have to have that common data model so we have the right comparatives. We're driving the right business decision making. But that is very, very important. So what we see with our clients is actually incorporating all functions of the business. Now you start with finance and accounting to get it right, to make sure we have the integrity in the financials, but then you have to include the others, because I've seen too many organizations. I have another client right now that we're dealing with, how production wants to look at their product hierarchy versus how finance wants to look at it, fundamentally different. And they spend a lot of time reconciling the numbers every month, reconciling the forecast, because it's so different. So part of our task over the next few weeks is actually to obtain a common definition, a common roll-up, a common view, a common perspective, so we're all talking from the same sheet of paper.
And you just triggered some like distant memory in my head where I remember that exact circumstance, because the business wanted to measure themselves one way, and we had the data in the general ledger in a different way, and it was like acrobatics trying to get from one place to another. And so I learned from that traumatic experience, clearly, that I do need flexibility in my data. And if you're not listening to everybody, you're going to find yourself in that nightmare again. Or Absolutely. Maybe for the first time, but you won't do it again, because then you'll just like start looking at that chart of accounts, or you look at how your data is coming out your system, and you're just going to go, I need this as flexible as humanly possible. Because when you do it that one time, that doesn't mean that's going to be someone's opinion for the next 2 or 3 years. Oh no, they're going to change their mind like maybe every 3 months or something. And so you need to have that flexible model to be able to support the business. So.
Oh, go ahead.
I was just going to say, the classic example I always use is, how much do we spend on finance in the organization? This is a real example. Healthcare company, CFO asked the question. Well, he got one number from finance, he got a different number from the operations, and he got a third number from one of the other teams, because you've got finance people in a manufacturing plant. Are they considered finance, or are they considered part of the product cost? You've got people sitting at corporate or at the executive level. Well, is that included in your finance function or not? So not only is it the data model, but it's the definitions that go along with it. And the numbers were materially different depending upon which definition you were looking at.
So we got really deep in that one, but I think,
this is so much fun, right?
I know. I'm going to take us back up a little bit and talk about, Karen, as you've mentioned the cloud, digital technology, and I know, Philippa, you've been a proponent of technology innovation as well. When you look at the digitization of finance and the promise of the technology that's available to us today, what do you see and what are you excited about? What technology innovations are you excited about for yourselves?
All right, I'm going for this because genuinely, for the first time in my 30 plus years, which I can't believe I ever say that, and I keep saying it just to remind me that I haven't really been around that long. Oh gosh, it really went quickly. But for the first time in all of that time, we're at a point where I can see true innovation for accounting. And not, oh yeah, we're just doing this and it sounds like we are. This is truly a great time to be an accountant. And what I can see now, and I have clear vision, and actually we're working on this right now, is I have clear vision to like a 0-day close. And I have, and that's possible only now because of the technology that that's around now. And so I have this vision that, you know, all those automated transactions, the mundane transactions, the processing AP, AR, that kind of transaction, they just happen. They happen with machine learning. They happen with all that kind of technology. So they basically, everything comes in. There's some magic happens with machine learning, and then pop out those journal entries that get posted. We then bring out our higher level intellect into, oh, what's unusual? So we have anomaly detection, and that pops out stuff that looks kind of crazy or a little bit odd. And it's the stuff you would have looked at anyway, but it just takes you time to find it. This time it's just like delivered to you on a plate. And then you can take a look at all the anomalies, sort those out, process that, get through that. And that is all pretty continuous and instant. And then you can imagine when you get to the month end or the quarter end, and then you start thinking, oh, how do I do my account reconciliations? Like, how does that work? Well, we know account reconciliations because I've done it for years. Tick, 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 tick. These numbers agree. We get the computer to do that. Yes. And then with machine learning, they can figure out like differences, and they'll start learning the same thing as we do learning, and they go off and find those differences for you. And so then you're left with just a few things to do. Maybe it's just a review. And so now I can imagine this world of like, okay, this instant close. And now I've got, oh, so now what is my purpose? What am I going to do? Then it's down to analytics. Now it's like, okay, you're getting this data all given to you, which the close is data, right? And now let me analyze it. Did it happen to fall out how I thought it was? What's popped up? And what I have seen just recently is that you can look at that flux comments, and you can use this kind of, I've forgotten what it's called, but some sort of machine intelligence learning thing that will pop out. Like, you'll look at this fluctuation analysis, and normally you're like, oh, where did it come from? The computer will tell you and give you some metrics and some charts that can actually deliver what you would have taken like a few days or like a week to figure out. And then you're like, oh, now I'm just looking at the numbers and really trying to figure out like what was the story. And you can probably see I'm super excited about this because I've been in the back office. I've been reconciling for donkey's years. It's now my time, and it's now the time for accountants. And that's what I'm super, super excited about. So over to you, Karen.
Oh, I love your story on what we call the digital close or the touchless close. So I'm going to steal your anomaly detection concept because you talked a little about more on the month-end close. But what if I can apply that same technology upstream? So even before the transaction gets processed, it doesn't let it process to flow through the data supply chain. So you don't even have to do journal entries at the end of the month because it's gotten it corrected at the source before it even happens. So we fixed that upstream. So you've got clean data coming through. So you're right. Then you've got your auto recs during the month end close or outside of the close window. And any exceptions that pop out, you look at, you do your root cause analysis on, and you go fix it upstream. So you're in that constant continuous improvement mode, but it gives you the time for the analytics to say, well, what if? Now you can start modeling out certain things to say, if this happened, what does this look like? Okay, if I fix this, what does that mean? And then translate that all the way now onto the back end where you've closed your books. What if I could automate the production of all my reports? Because we still always have to have Q's in case, like that's never going away.
Oh, yes, I forgot that part. So carry on. But yeah, I forgot to talk about that part.
Yeah, so you get the Q's and K's, they're automatically produced, but then you can automate the tagging for XBRL, the automatic submission. You're done. You really have done a touchless off, hands off the keyboard from a closed perspective. You are focused on all the things you've talked about, Philippa, around doing the analytics. What does this mean? And that's a great concept. And these technologies didn't exist 20, 30 years ago. This allows us to really change how we go about, which then also means the profile of an accountant changes. And that's exciting. We said intellectual curiosity. Now it's about how do we reinvest in our people? How do we train them to do things differently? So now you can talk about the Q's and K's because you forgot to mention that.
Yeah, no, I forgot, but that was exactly what we were doing. It's actually what is in our plan, exactly that, which was just to feed straight in and then have them issued. There's some things where we're pausing on some of the writing, some of the notes. And so we're trying to figure out like, oh, we've automated all of this. Now, how can we automate that? And I think what has happened and what the momentous shift has happened is it's freed us from the chains of our current processes to now think, well, what is the art of the possible now?
Yeah.
Now I've got all of that taken away. How can I realize this? The technology is there. You're the only one that's holding yourself back now.
That's right.
Let's reinvent it. Let's rethink it. And I know the team that I'm talking to, I'm just the figurehead at the whatever I am. But with all the excitement I'm bringing this, because I can feel it in my body, so I'm sure you're hearing how excited I am about it. It's gone through the team, and it's gone through the tax team. Like, tax is normally, well, quite frankly, the poor people at the end of the process that has to work, like, I don't know, through the night to get the journal entry. And I was thinking, oh gosh, they're just going to hate this as a concept. No. And genuinely, I was surprised. I came in like, this is fantastic. We're rethinking about how we can do our tax entry and how we can use this automation to do that. And so that excitement just goes through. And I think it's particular at the time right now because we've sat there, we've done our reconciliations, we've sat in the corner, Now the technology is there, so we can truly be excited. And can you imagine that? A world of excited accountants? The world is definitely going to change.
Yes.
Yeah, I don't know if the world is ready for excited accountants, Philippa. But so there's excitement in accounting, which I love. Karen, in FP&A, is FP&A just as excited? And what is it that you think FP&A is excited about in terms of technology innovation, if anything, that you observed?
Oh, they're super excited from a technology perspective. So think about being able to do predictive and prescriptive forecasting and analytics. So if I can take external factors and know what is truly a correlation and going to have an actual impact on my financial statements, being able to run that on a real-time basis. So it's no longer month-end close, then we do the forecast. It's the ability to turn that scenario middle of the month. Hey, today I want to know, we saw, a big drop in the market if that were to happen. Okay, what does that immediately do to us in our business? Or a real example for a financial services company that I worked with. We have a hurricane. They need to, within 20 minutes, okay, be able to analyze how many loans do they have in the Gulf, because again, with the hurricane wipes things out, you've lost power, people can't then pay back the loan. Not only is it those individuals, but who are then their suppliers or their buyers, and what does that do? And be able to turn that scenario and know what's it going to do to the bottom line of our organization. That's really powerful to have that capability. And so being able to combine the machine learning, the artificial intelligence, the predictive forecasting is huge. I mean, we've gone from direct data entry in FP&A to do our forecast to driver-based concepts to now getting to that predictive and prescriptive capability is huge. And they're excited because now they get to look at it across the enterprise. It's now about enterprise analytics, not just financial analytics. So we talk about what channels do we want to invest in, what products do we want to invest in, what customers do we want to focus on. It used to take days to assemble that information. Now, I mean, think about it this way. We have a commodity price increase. To be able to model out which individual item is going to get impacted and when, and who's our customer that's the biggest buyer of that, and be able to have a good conversation with our customer to say, hey, by the way, we're going to need to pass along a price increase over the course of time. That's powerful. That's actionable and immediate decision making, and that's what FP&A is excited about, to be able to focus on those things, not the routine, as we've been talking about in the accounting side, the routine of creating the forecast, creating the long range plan, creating the annual budget. It's really about moving that needle with the new technologies.
So then if I was to summarize, because I was listening, I was like, wow, that's super powerful. I hadn't thought about hurricanes and everything else, because quite frankly, I've never been in that kind of industry, not near a hurricane. And I was just listening. I was like, God, that's so powerful. And then you said it's powerful. So I think what we're hearing is like, it's a good time for anyone to be in finance.
Yes.
And when I think about my FP&A BFFs, I've always felt really bad for them because everything was done on Excel. And I'm like, oh my gosh, how do you do that? Because I've got double entry bookkeeping and I've got a whole system that keeps me in check. But for them, it's all Excel. You make one little mistake there and it could be potentially huge, right? Or it could be small, just don't know. And I think as the systems have got better, they've got away from that. And I also think my brethren over there were also wasting time doing reconciliations and just kind of like, I'm just so excited for them as well. This is great to be in finance.
Yeah, it's an exciting time for everyone. I think these new technologies, and what's interesting is finance always wants to be on the forefront of trying the new technologies. They sort of want to be the guinea pig, if you will, to try it out, to prove that we can make these changes, we can take advantage of it, and that's exciting, to be the first one, to be the pilot, to be able to do that.
So I think we've come full circle from Tom Davenport saying that, finance is maybe lagging, to a sense of excitement at every possibility that's out there. So I'm going to ask you the one last thought question. As we wrap up, what one or two things would you advise finance leaders who are looking to expand their data analysis capabilities and move more towards that business partnership and away from perhaps the transactional and reconciliations? What are one or two things that you would advise for the folks today?
I'll go. I can't remember whose turn it was, so please excuse me if I'm taking my turn first. But I think, when I think about why is all this possible, it comes down to that data right at the beginning. It's like none of this is possible unless you've got a good foundation. It's like building a house on firm rock rather than on the sand. You got to start with a firm foundation and then build upon that. And don't run before you can walk. Have a vision, have a great vision, but don't steamroll into it too quickly, because you're going to miss some steps and then it's all going to fall down anyway. And so gently go through that process with urgency, with excitement, but with logic, and keep building the foundation until you've got to that point where you've got great data, that's flexible data, like everything we've talked about, and then bring the people along with it and make sure that you don't leave anyone behind, as it were, and give that training and help understand the stories, the analytics, like how do we do that and how do we shift, and make sure that we get that, what is it called, an open mindset or a flexible mindset?
A growth mindset.
That one, growth mindset. Let's all have growth mindsets on this, because that's what's necessary. And I think that will help people get to that next stage. Karen.
No, I totally agree with everything you said. I think the other thing that would support some of the comments you made, Philippa, is, we don't need to take months to prove out the new ideas. Build pilots. Take 6 weeks. Prove it out. You have a use case. Prove it out. Apply the new technologies. That's going to success breeds success. You haven't wasted a whole lot of money. You've been able to try it out. Prove the new skill set, the new technologies. Put it into production. Let people start using it. Build on that foundation, but do it in a more agile-like capability. The other thing is, don't be afraid of change. Be open to it. Embrace it. Being, instead of everything being black or white as an accountant, be open to gray. Really say that it's okay if it's not right. We didn't waste a whole lot of time. Take advantage of it. Try it. It's not so scary. And then make sure that you actually, to your point, Philippa, invest in your people. Make sure that you've, not only as you change the technologies out, that you remember sometimes they need more training as well to understand the new technology, but also how to think differently. As you said, there's some parts of our muscles that we haven't had to flex in a long time. Make sure you invest in your people to help you drive to greater insights across the organization.
And I think you nailed it in terms of just being ready for change and embracing change. And, we talk about data models and everything else, but if you don't have people that want to go on that journey, then you're stalled right at the beginning. And so having that ability to want to change, to see the future, to dream the accountant's dream or the finance dream, you got to have that, because if you don't have that, I don't think you get anywhere at all.
Yeah, totally agree.
Philippa and Karen, Thank you so much for sharing your insights on a very far-ranging conversation today. We went decision ready, change ready, data model, accounting passion, BFFs between FP&A and accounting. We so appreciate your time and expertise today. And for everyone who's participating today, if you are interested in exploring this topic further, please join us in our upcoming conversation on July 20th with Harvard Business Review. And Karen Schreiber, where we will be exploring finance's key role in building the data-driven enterprise. And you can find more details about that in the comments below. And with that, we look forward to seeing you again in a future episode of Workday Chats.